Hi everyone, welcome back to my channel. In this video, I'll show how you can easily calculate the beta of any stock portfolio. So first, what exactly is beta? In finance, beta is a measure of the volatility or risk of a stock or a portfolio compared to the overall market, which is usually represented by a benchmark like the S&P 500. In simpler terms, beta tells us how much we can expect a stock's price to move compared to how the overall stock market moves. For example, if beta equals 1, it means the stock moves in line with the market, no more or no less. When the market goes up, we can expect a stock to also go up, and vice versa. And if beta is lower than 1, that means that your stock is less volatile than the overall market. That tells you that your stock is relatively stable and doesn't go up or down as much as the overall market does. Now, if beta is more than 1 though, that means that the stock is more volatile than the market and is expected to move more dramatically. This often implies higher risk, but it also comes with the potential for higher returns. And in rare cases, beta can even be negative, which indicates the stock moves in the opposite direction to the market. If the overall stock market goes up, the stock with a negative beta will go down, and vice versa. So now let's calculate the beta of this imaginary portfolio together. If you'd like, you can follow my steps but use your own real portfolio and your own stocks. For this video, I'll be using Google Sheets. As you guys will see, it's easier to automate some steps, but I'll tell you how you can do it in Excel as well. So let's imagine that we invested $10,000 across 8 different stocks: PepsiCo, Coca-Cola, Google, Apple, Verizon, Amazon, Nvidia, and Tesla. In the next column, let's include the tickers of each stock, and you'll see later why we need them. And in column investment, let's assume that we invested these amounts for each company. And if we add them together, it's going to be $10,000. And you'll notice that the investment amounts are different for each company, and there is a reason for that. And now we only need these 2 additional columns to be able to calculate the beta of this portfolio. For the first column, we're going to call it as weight, and we want to find out how much each stock contributes to the overall $10,000 portfolio. As an example, PepsiCo, we invested $2,000. So just doing some quick math, it's going to be 20% of the entire portfolio. So let's do the math here. We're going to start with an equal sign. We're going to select the first cell for PepsiCo, and we're going to divide it by the $10,000. And let's log the cells here so that we can use for other stocks. So I'm going to lock it, and then we will just use this and drag it down. So now we have weights for each stock. Let's just do a quick check just to make sure our formulas were correct. So we're going to do the sum, and we're going to select all these different percentages, and in the end it should be 100%. So we see 100%, that means that we did all our formulas correctly here. And now in the final column, let's call it beta. First we'll need to find the beta of each individual stock separately, and then we'll be able to calculate the overall portfolio beta. So there are 2 ways to get the beta of each individual stock. One of them is manual and another is automated. If you're using Excel and if you prefer to do this step manually, you can go to a website like Yahoo Finance, go to their summary tab, and below the chart you'll be able to see something called beta. And you'll see the number 0.54, and you can come back and just type 0.54. But the cool thing about Google Sheets is that we don't need to do this step manually for every single stock. So let's just remove 0.54. We're going to start with an equal sign and type Google Finance. The first thing we'll need to enter is going to be the ticker for the stock. So in this case, it's going to be the ticker PEP for PepsiCo. So that's where the ticker comes into play in our table. Once entered, we're going to need to enter a comma after, and now we need to select an attribute. In this case, let's open the quotations. Let's type beta and close quotations. And you'll see that the beta of PepsiCo is also 0.54 by using the Google Finance formula. Next, let's drag the formula for all of our stocks. We're going to drag it for all 8 of them. It's going to load, and now we have the beta for each of our stocks. You'll notice that the lowest betas are for Verizon, PepsiCo, and Coca-Cola, which are considered as more stable and relatively safe companies. The Google stock seems to have the beta closest to 1, so if the stock market goes up or down, we can expect Google to follow the same trend. Then we have Amazon and Apple with somewhat higher than 1 betas, but not too high as well. So this indicates that the companies might be growing and might be a bit risky, but not too much. And then we have Nvidia with the beta of 1.63 and Tesla with the beta of 2.30, which is the highest one. And it's not really surprising because Nvidia and Tesla stocks can go up or down in prices by a lot, and they're not as stable as, let's say, Verizon or Coca-Cola. But as discussed earlier, you can potentially get more returns from the stocks with higher risks. So now we have the betas for each individual stock separately. We'll need to determine the beta of the overall portfolio. And we cannot really sum the betas together because if we do so, it's going to be some crazy number. So let's try it. Let's select all of these. It's going to be 8.86, which is a crazy number, so it's not going to work. And in this case, we're not even going to be able to use the average function to be able to correctly calculate the beta. So in this case, it's going to be 1.11 because the weights of each stock are different. If we invested the same amount of money for each stock, then we would be able to use the average formula. So instead, we're going to have to use the weighted average formula to be able to calculate the beta of this portfolio correctly. So let's remove the 1.11. Let's start with an equal sign and let's type average dot weighted. Let's open the brackets. For the values, we're gonna choose these ones. So we're gonna select all the different betas. Let's add a comma. And then for the weights, we're gonna choose our weights. Let's close it. Boom. We got 1.19. That's the correct way to get the beta of the portfolio. And if you're using Excel, you should be able to use the sum product function. So let's just type sum product in the next cell. Let's select our weights, comma, and let's select our betas. So this formula also does the weighted average. So we're gonna reduce the numbers. So after rounding, you'll get the same 1.19 with both approaches. So in this scenario, we can see that the beta of our portfolio is 1.19, which can be okay or not depending on your portfolio's goals and needs. For example, you can have a goal for your portfolio to have a beta as close to 1 as possible. And in this case, you'll realize that your portfolio's beta is higher than 1, and you may need to rebalance your portfolio to get as close to 1 as possible. So let's try to do that. For that, we'll need to look at the betas of the highest stocks, so Nvidia and Tesla, and the betas potentially of the lowest stocks, like Verizon, PepsiCo, and Coca-Cola. Let's assume that we sold $1,000 of our $2,000 Tesla shares. So let's remove $1,000 and let's add that $1,000 to a stock like Verizon. Our investment was $500 before, so if we add the $1,000 after selling Tesla, the overall investment will still be the same, $10,000, but now you'll notice that the weighted average of our portfolio is at 1. But that doesn't really mean that you always have to look at the beta number to make all your investment decisions. In this case, I'm not sure if selling Tesla was the right move to buy Verizon, because I didn't do any research on any of these stocks. So you can use the beta as one important financial metric in your portfolio, but obviously also do your research and look at all the other different important metrics as well. I hope you found this video helpful and now you know what beta stands for, how to find the beta of each individual stock, and then how to calculate the weighted average beta of your portfolio. Thank you so much for watching this video and I'll see you in the next one.